Year for the bulls, of course, as all three indices are on pace to close out the year with more than 9% gains apiece. So as we wind down the year, it's time to start thinking about the new year. Where are the best plays? Yu-Dee Chang, Chief Investment Officer for Ace Investment Strategies, joins us now with some great ideas. Yu-Dee, great to see you. So how closely, let me start here, are you keeping an eye on this tax debate to make your investment decisions?
Yeah, no doubt about it. I think this is very important. You have to not raise taxes. You have to give money back to where the small businesses are, so to spend the money and stimulate the economy. So it's a very important issue to me.
And then what about the Federal Reserve? We heard from Bernanke last night saying QE3 is not out of the question. That said, though, QE2 has created a tremendous wealth effect in the stock market, and the bulls love it.
Yeah, and it's kind of interesting. I don't know about that. I think basically markets are taking a wait and see kind of attitude, right? Bernanke basically said, yes, QE3 is not out of questions, and we're not printing any new money. But the money has to come from somewhere, right? From this reserve. So that is a concern down the road. Also, Bernanke apparently is more concerned with deflation rather than inflation, and saying that, hey, any day within 15 minutes, he said, we could raise rates to control inflation. However, he could try to do that, but it really depends on how much inflation is already in the system. So the market is saying, you know what? Basically, all this is going to help the market out, but that's not the only cure. I think markets really saying more than monetary policies, it has to be physical policies as well to help this economy.
So, Yu-Dee, all of this has you buying on dips, selling into rallies, using 3 to 4 month sector rotations. Pretty standard stuff, right? What other advice are you giving clients these days?
Well, I think in addition to it, it's kind of interesting. When you look at the overall market, it hadn't gone anywhere since 1998. For the past 12 years, we went up, we came down, we went back up. So I think on an individual stock basis, there are opportunities buying dip, selling rallies. However, on a market basis, what we like as one of the alternative strategy is to bracket the market, believe it or not, saying that within a short-term time frame, the overall market itself is just not going to go anywhere big. In a sustained fashion, we're selling calls and we're selling puts, bracketing this market as an alternative strategy.
Can you give me a specific example using sectors? I know you like base materials, so how would you bracket that?
Yeah, I wouldn't bracket the sector per se. I will actually use the sectors to buy the dips and sell the rallies. But on the overall market, we're talking about the S&P 500 index. These 500 companies as a whole, we're saying, hey, it could go up. It does come down. However, let's say within the next 30 days or so, it's not going to go up another 10, 15%. We'll go down another 8 to 10%. Thus, we're selling and calls and puts on the market indices, but we're actually buying stocks within the sectors.
So you have to do your homework on the options plays, but I do want to talk about the sectors because you forwarded us a couple of those. So let's stick with the base materials. I know China, emerging markets, other emerging markets, you're very much in favor of, but you've got inflation concerns and concerns of an overheating economy specifically in China. So tell me more about this play.
Yeah, I think overall speaking, China, India, no doubt, they're still growing. Just go there and take a look. So whether we're having inflation or not, they're going to grow. Of course, the question is, how much will they grow? So anything related to the Asian growth, I believe the base material sector is a good sector to rotate in or sell out your sector in. Also, the precious metal sector, we believe, is also a good sector. I think one of the very interesting, it's a little bit speculative, is actually the so-called rare earth play, REE. Take a look at that. It's an interesting play.
All right, quickly, you like technology. You say tech wins in any environment. And you also like gold. Gold having another huge run today. Where do you see gold topping out in this cycle?
Well, I think on the very short-term basis, gold is heading up to about 1,800. Hence, you win. If economy recovers, it's going to be inflation down the road. You buy gold. If economy double dips, then you buy gold for a turmoil play. So either way, we like gold up to about $1,800 per ounce.
Yu-Dee Chang, a great chat today. Thanks so much for your time. Have a good day.
Thank you, Laurie.
Well, the insider trading